Primary Health Properties is optimistic about its prospects. The UK-based firm has noted the British government's commitment to reform the National Health Service and says it is well placed to capitalise on opportunities that move will create. The commentary comes alongside a trading update from the group. In the 9 months ended September, the company generated an additional £2.7 million of extra rental income from its rent review and asset management activities, both in the UK and in Ireland. Quilter has reported that third quarter net inflows increased to £1.4 billion. This is materially higher than strong first and second quarter levels. CEO Stephen Levin says in what is traditionally the slower summer quarter, the firm has delivered an excellent performance, but there is a dark cloud on the horizon for the group. Quilter has warned that the upcoming UK budget has created some uncertainty. That's as changes could be made to the structure of pensions and savings, which would affect the business. Quilter says it's engaging with the UK government on the matter. 91 has reported a 0.9% dip in assets under management to £127.4 billion in the second quarter. That's when compared to the previous 3 months. But year-on-year assets under management rose 3.5%. The firm expects to publish its interim financial results on the 20th of November. ArcelorMittal SA has had a tough third quarter. The steelmaker has posted an EBITDA loss of R466 million during the period. That's largely due to challenges at its longs business. That division is operating at a loss. AMSA says urgent action is required to turn things around. This includes the removal of export tax on scrap, resetting the price preference system, implementing trade measures and addressing logistics and energy costs. The firm acknowledges that government is committed to addressing the issues, but says should the situation not change, the viability of the entire business will be at risk, and this will cause job losses and have a profound impact on the economy. Northam will withstand the earnings pressure caused by the cyclical downturn in platinum group metals prices. That's according to credit rating agency GCR. The company believes the miner's low-cost profile as well as its access to liquidity will provide it with the necessary cash flow and financial flexibility to ride out the challenges. And this is why it's affirmed Northam's outlook as stable. Sasin has narrowly avoided having its shares suspended. The JSE warned the firm that if it didn't publish results by the end of October, trading in the company's stock would be halted. But the bank and wealth management company says it will open its books on Monday. This comes as the firm prepares to delist. The company has also had a tough time of late as it faces a mammoth tax bill from SARS. That claim came months after the firm's employees were ensnared in illicit tobacco deals, which helped facilitate money laundering and circumvent exchange controls. Jumia will close its South African online fashion retailer Zando. The Africa-focused e-commerce firm plans to do this by the end of the year. That's as it looks to sharpen its focus on other markets. CEO Francis Dufay has noted that the South African market is highly competitive, making growth difficult. Online fashion retailers like Zando and Superbalist have faced increasing competition as fast fashion Chinese e-commerce retailers Shein and Temu have aggressively moved into the local market. And South African households continue to suffer under high interest rates. According to the latest Altron FinTech Household Resilience Index, families are having to spend 9.1% of their disposable income on servicing debt. This is up from 6.7% in 2022. The data also shows that the burden of debt costs are at a 15-year high. That's as interest rates have only recently come off the boil. The Monetary Policy Committee agreed to a 25 basis point cut in September, marking the first reduction in 4 years. This move is likely to only be reflected in the economy in 2025. In international news, British inflation dropped sharply and key price gauges watched by the Bank of England also fell, boosting bets for an interest rate cut next month and helping Finance Minister Rachel Reeves before her first budget. Here's more detail in this package report.
British inflation dropped sharply in September. Wednesday's data showed it fell to 1.7% last month, better than analyst forecasts. That was down from 2.2% in August and the lowest reading in 3.5 years. British officials said the number was driven down by lower airfares and petrol prices. Key price indicators watched by the Bank of England also fell. Core inflation, which excludes energy, food, alcohol and tobacco, dropped to 3.2%, slightly down from August. While services inflation sank to its lowest in 2.5 years at 4.9%, well down from August's reading. It added to bets the central bank would cut rates next month. Interest rate futures showed investors were putting a 90% chance on 2-quarter-point rate cuts by the end of this year. Britain's Finance Ministry welcomed the fall in inflation. It offers a helpful backdrop for Chancellor Rachel Reeves as she readies her first budget due on October 30th. Reeves has struggled to find the extra money to invest in public services and new infrastructure without spooking investors. Her spending plans will be watched closely by the Bank of England.
And French luxury giant LVMH reported a 3% fall in third quarter sales, undershooting estimates in its first decline in quarterly sales since the pandemic as demand in China and Japan weakened. Let's take a look at this report for more.
The world's biggest luxury group has a growing problem with China. French giant LVMH on Tuesday reported a 3% fall in sales over the third quarter, dropping to just under $21 billion. That was their first decline since the pandemic era. Sales in Asia outside Japan, which largely means China, plunged 16%. The country's post-health crisis spending spree faded away last year, with a property crisis weighing on consumer confidence. Hopes that government stimulus measures would revive spending appetites have yet to pan out. The new numbers disappointed analysts who had forecast modest growth. One told Reuters that LVMH badly undershot expectations, posting misses across the board. The firm's key fashion and leather division, home to labels like Louis Vuitton and Dior, saw sales decline by 5%. That was miles off forecasts for a 4% rise, and the first drop since 2020. It all came after news of an even bigger decline at Italian rival Ferragamo, adding to a sense of deepening gloom. Now the LVMH figures are likely to weigh on luxury stocks, with the firm considered a bellwether for the whole sector. Analysts at UBS now predict the third quarter will be the worst for luxury brands in 4 years. They forecast a 1% decline in year-on-year sales.